So for those of you who watched last night's game plan, I explained to you the technical reasoning behind the SPY was more likely to spike first to fill the gap towards 555 rather than continuing to sell off for the short term, even if the overall trend was macro bearish. Surely enough, 549 did end up reacting as support. In terms of the break and retest in the green, red, green bullish pattern, that ended up forming multiple times throughout the day. In terms of Team Roar, we are starting off the week on absolute fire, going 8 for 10 on the overall day. I'm going to be breaking down the trades that we ended up making. Ended up being multiple 100% profit returns. In terms of G-Roar, he absolutely crushed on the day, man. So first things first, I'm going to get straight into the money-making opportunity. We are setting up for another highly lucrative trading opportunity heading into tomorrow to be trading both ways. I'm going to explain to you the exact levels where I'm interested in buying call options, mainly using the break and retest strategy heading into tomorrow. And I'm also going to explain to you the key critical level for puts, where if the SPY is breaking above previous day highs, there's going to be a key make or break level interest level for puts that can potentially flip the short-term trend bearish. So let's get straight into the analysis. So based off of the daily chart, I am seeing two patterns that can potentially play out. Now, in terms of these two overall patterns, the main focus is going to be trying put options if we are breaking above the previous day highs. So I want to quickly explain to you the patterns that I'm seeing. So in terms of this move, I want to explain this to you here, right? So you can see, right, the SPY is on this slanted downtrend right here. The SPY is on this slanted downtrend right here. It forms this red bearish daily candlestick, red bearish daily candlestick. Candlestick before that is this trend reversal. Candlestick before that is the trend reversal, sells off, sells off. Next candle is a green bullish daily candlestick facing to the upside. Green bullish daily candlestick facing to the upside, right? So a lot of similarities. In the SPY was also forming lower highs. This was previous support. This was previous support. These are lower highs. As you can see right here, this was previous support right around here. These are lower highs attempts, right? So a lot of similarities. Now, in terms of the next day, it ends up forming a red, green, red overall bearish pattern, right? In terms of the overall previous closing price, it was 594.18. In terms of the overall open, it was 596. So in this situation, it opened up with a gap up. So based off this pattern, especially if we're opening up with a gap up, going to be looking for an opportunity on put options if we're seeing key resistance a couple points above the previous day highs, which is going to be towards 563. I think that was the main level of interest. Let me go to the 10-day, 30-minute chart and double check that here for you. So, I mean, the main level of interest was towards this 563-ish range, right? So the point is, if we're gapping up and 563 is reacting as a resistance level, I'd be interested in put options with that overall pattern if there's red bearish 30-minute candlestick confirmations. If we're not gapping up and previous closing price reacts to support, then I would still be interested in potentially buying put options towards 563, right? But if we don't gap up, it could potentially sell off at lower levels. But in terms of the overall pattern, man, just be aware in terms of one of the overall situations that I'm seeing, especially if we're gapping up, but just overall, if we're seeing resistance towards mid 562 to 563, it's going to be an opportunity for puts with the red bearish 30-minute candlestick confirmations for a potential sell-off for a potential red, green, red pattern. Now, this is the other pattern that I'm seeing, right? So I'm also seeing not just a bearish pattern in terms of, like they said, the main bearish play would be if we're seeing strong resistance on a gap up. I mean, if you're seeing major resistance on the previous closing price, you could attempt puts, but you got to be careful because overall pattern says we could spike first, especially if we're gapping up. So like I said, if we're gapping up, don't aim for puts at lower levels, aim for the higher level. If we're open up flat and you see bearish confirmations, you can attempt puts quickly towards previous closing price. That's another strategy on the put side. But I want to go over the call side as well, because it's saying, this can either be a bullish or bearish overall trend day. One of the main determining factors for that situation is going to be the previous closing price slightly below that in terms of calls for an oversold level, and then how we react if the SPY gaps up or how we react towards key critical resistance. But in terms of another pattern that I'm seeing, we're selling off to the right side, red bearish candlestick right here, green bullish candlestick right here. And then you could see there was this gap that was waiting to fill below at 540. Once the SPY dropped back down to fill the gap, it began to have a gap close reversal and it started to spike, right? So in terms of a very similar pattern, if you were to compare what I just showed you, and also if you go back historically, you're going to see, man, there's been times where this has been reacting very bullish. Like right here, there was a gap to fill right here. It started to fill the gap with this red bearish candlestick. Next day, it overall started to go bullish. But one point that I want to bring across in terms of the bullish thesis, we had a gap that was waiting to fill below towards this overall range. We had multiple gaps. I mean, there was a gap towards right here, towards this 551 area to low 550. The SPY has been attempting to have a bullish reversal. This daily candlestick right here is bullish. This daily candlestick right here is bullish. But again, it's not just how the daily candlestick looks, it's how it's facing, you know, in terms of indicating overall bearish potential move. It could be potential bearish because we were selling off slanted to the right side. See how in this situation, we were pushing up. We were pushing up right here. See how we're pushing down? Then it forms a bullish candle. That's more bearish than bullish compared to this because we're pushing up right here. Then it forms a daily candle, right? That's why I explained to you that red, green, red situation. If 562 to 563 reacts as a resistance, then it's going to be overall bearish. But like I said, man, in terms of a key interest in what I wanted to bring awareness to in terms of this overall situation, this could be an overall bullish daily candlestick. It's just the problem is it's how it's faced. But it is trying to reverse at overall gaps. You know, we had gaps right around the 550 level. We closed the gap. It's trying to reverse. And another reason for potential bullish thesis is there's a gap that's waiting to fill above right here at 567. You know, so it's going to try to explode up and fill the gap if it's holding key critical levels. Not only have a gap close reversal, but try to explode up and close this gap right here, right? In terms of the weekly trend, there has been an overall break of that weekly pattern almost. You can say almost. So you need to understand, man, we are at key critical levels, man. Like in terms of puts, we're talking make or break, man. In terms of like bulls and bears, this is the ultimate fight towards this upper resistance level. We addressed this in the overall previous video. If you looked at the overall weekly chart, I mean, you're going to see so many situations, man, where like whenever the SPY forms this red bearish weekly candlestick, and keep in mind there was key previous support right here on the weekly chart, support, support, support. We had a breakdown, we had a crack below support, a spike back up, lower highs, lower highs, lower highs. Previous support reacted as a resistance, red, green, red, all bearish, but really caught my eye, but not just the breakdown retest strategy with the lower highs and the red, green, red bearish weekly pattern, but what caught my eye was the overall weekly candle, man. Like if you look at the overall weekly candle, see, this is what caught my attention. This is key, man. You can see right here, this is a very bearish weekly candlestick. And then the next week, as you can see, you know, the SPY had a massive sell-off and we did just see a very nice drop. And surely enough, it did end up bottoming towards the 549 level to then explode up and fill the gap. That's why I was telling you to sway away from puts first, even if we drop below 549, because it's likely going to fill the gap first. Because if you look at the overall pattern, the SPY sold off hard first and then it exploded back up. In terms of the previous week, the previous week's lows was at 599.50. If we were to measure the move, it went to 603. So it literally went like, you know, 3.5, like 4 points above the previous week's lows, right? In terms of previous week lows, it was towards 555. So if you were to measure the move, 559 and also like 563 are key levels where basically if the SPY is maintaining below the previous closing price, 559.39, that is very bearish, because if you measure the weekly move with the weekly bearish pattern, if we're forming a roof or resistance regardless, even if we gap up or gap down, open up flat regardless, we're going to be interested in puts based off this overall weekly situation. Whereas if, you know, previous closing price reacts bearish heading into tomorrow, we're seeing a breakdown, we're seeing a clear retest, we're seeing strong resistance, red, green, red, bearish 30-minute candlestick pattern, we're going to be buying puts with anticipation that it's going to start to drop back down. And then later into the week, it could have a strong overall bullish recovery, right? So one thing that I want to be very clear about is the two levels. But in terms of like the bears to have true strength heading into tomorrow, it needs to be below 559. Now, if we're opening up with a massive gap up, then it needs to be 563. But if we're not having a massive gap up, it needs to stay the fuck under 559. But the point is, man, as long as we are maintaining below 559, overall bearish. But even 563, if we're maintaining under 563, still overall bearish. But 559 is going to be the key level tomorrow, where if that reacts as a resistance, I'm definitely going to be doing puts. Based off the weekly chart, if we're maintaining below previous closing price, SPY is super bearish, and we're going to be doing puts. If we're gapping up and 563 to 562.50 is reacting as a resistance, SPY is bearish, and we're going to be doing puts. Now, with that information, regardless, and for there to like not be a break of trend, right? Because I explained to you how the most likely outcome was the SPY would bottom first towards that 549 level. And if you go back historically throughout my video, I used to mention 547 a lot. And in terms of measuring the overall move, I kind of changed that. I went with 544. If we go under 549, we're going to drop to 544. But if you go historically back throughout the content, I did mention that 547 was a key level of interest to be buying call options. So that's another key information to be mentioning, man. We had a very strong bullish wick at 547, and then we had a very strong trend reversal pattern. This is a trend reversal pattern right here to buy calls. If you see a pin facing to the upside, pin facing to the downside, and there's a reason to buy calls, say it's at our key level with strategies, that's very bullish, where SPY is going to try to retest the high of this wick. And then you can see this wick right here. SPY forms the same overall wick, green, red, green, higher support, previous resistance, break, drop back down, retest, green, red, green, retest the high of this wick, super fucking bullish. This is another breakout, retest, green, red, green, going to try to retest the wick, bullish close, green, red, green, bullish pattern, ended up working out multiple times on the overall day with the break and retest strategy. I'm telling you, it's going to keep on repeating. You got to capture in real time. But the point being is, man, as of now, everything is playing out in terms of the most likely outcome. The most likely outcome was we bounce first, even if it drops. That's why I was swaying away from puts first, even if it drops, because I was well aware that the most likely outcome was that the bears were going to get trapped first and the SPY was going to fill the gap, even if it's an overall bearish week. So in terms of the most likely outcome, it's been working. The SPY ended up, bottoming towards the zone. And once it had break and retest above resistance levels, this is resistance, this is a resistance, this is an overall trend reversal bullish floor. But once we started to, break above pre-market resistance at 551, had a break, had a retest. I told you, if you're seeing a break and retest above 551, you're going to want to be buying calls. Higher floor, higher floor, higher floor, higher roof, higher roof, higher roof, green, red, green, higher support above the previous resistance, break, retest, green, red, green, buy call options, right? And then you could see again, man, this overall pattern, we covered this last week, when SPY's on a bullish uptrend with break and retest with green, red, green patterns. If you're seeing these top wicks, SPY's going to try to retest the high of these wicks. And then you can see right here, top red wick. It's at higher support. It was a break and retest. Right? Green, red, green, and then just overall bullish retest, right? And then just overall green, red, green, bullish retest for the wicks. All reasons to be buying call options, just along with the thesis. Like I told you, it's likely to spike first and go above the previous closing price. Then it's going to try to drop in between like 557 and 559. So you need to understand that the most likely outcome is playing out. And in terms of the most likely outcome, it's now favoring the bears now. It's favoring more of the bear territory for the short-term micro, because you need to understand the most likely outcome happened in the quickest way possible. Since it happened so quickly, even if the SPY is setting up for a bullish week, and even if there is a break of trend where we push above 559 to 563 and SPY reacts to support, and we have a crazy bullish fucking week to explode up to 569 and there's a break of trend, because I told you, this situation with the weekly chart is still bearish as long as we stay under the overall move. So in terms of the next step of the most likely outcome, the next step is an opportunity for puts, because the most likely outcome is saying it could be a bearish week. But not only that, we are so earlier into the week. So even if it is a bullish week and there's a break of trend with the weekly chart where we go from bearish to bullish and we're pushing above 559 to 563, you just need to understand in terms of most likely outcomes, since we had such a big spike this earlier into the week, even if the trend ends up flipping from bearish to bullish and there's a break of trend, it's still likely to drop first at the overall levels because we have so much time left into the week. This is part of the curriculum in terms of understanding when a bull or bear trap is expected to get created. I made it very clear that the overall trend this week could be bearish, but I was swaying away from buying puts at the key breakdown level earlier into the week because the weekly chart said we can explode up to fill the gap at the previous closing price, which was towards this gap right here at 555.75, and it even said we can go slightly above that, which is why I told you the best opportunity, you could try calls first at the lower levels at the support, and then once we start to go above the previous closing price, if you're seeing bearish confirmations, then you could try puts, and then if the SPY is selling off later into the week, it's more likely to work in terms of an overall bearish trend where it kicks in rather than early, where if it goes 549, then it's more safe to buy puts under crack 549 rather than it is earlier into the week, because I told you the pattern says even in an overall bearish week, and since we're starting earlier into the week, the SPY is going to try to spike first to fill the gap. It's serving a purpose. It recently reversed at a gap towards 550, and now it's spiking back up, and it closed the gap at 555. If you measured the overall move with the weekly chart pattern and watched last night's video, it was very clear that the most likely outcome was, and that it was extremely dangerous to be buying put options, even if we are dropping below 549 and the bears are gaining some control, because it's going to try to explode up and fill the gap. So what I'm telling you is, with this overall curriculum, it's now favoring the bears, where we're due for a pullback, even if there is a break of trend, and even if we switch from overall bearish to bullish thesis into this week, right? And like I said, for a break of trend, we need to turn 559 into support. But for a true break of trend at this point, we need to break above 562 to 563. If that happens, it's going to be an overall strong bullish week. If we're breaking above that and reacting on support later into the week, overall strong bullish week is now. So you just need to be aware, like I said, even if there's a break of trend and the bulls do end up taking control, because right now we're at make or break resistance, where technically we are still bearish as long as we stay under the level, and the focus will be as puts as long as we're staying under previous closing price, or as long as we're seeing, previous closing price breaks down and reacts to support, 559, then we'll be looking for puts at 562.50 to 563, right? But as long as we're maintaining in that zone as resistance, overall, we're still setting up for a bearish week. Plus, we are so earlier into the week where there's plenty of time to drop first. We just had a massive overreaction to the upside. So now you have to be aware of, okay, we just had a massive move to the upside. Even if the trend ends up flipping bullish this week, the most likely outcome is still a drop first rather than a continuation of this overall spike, even if there is a break of trend, right? It's very clear. Like the trend was, if you studied the video, the trend was overall bearish, but it doesn't make sense to just buy puts right away at this key support, especially when it's saying it could potentially go above the previous closing price, right? So even if there was a break of trend, we're earlier into the week, if the SPY went below 549, we're likely not going to be doing puts or being extremely careful, because the overall trend says we could spike first to the previous closing price to fill the gap at 555, right? So now I'm telling you, overall trend says, even if this week ends up flipping bullish and 559 and 563 is breaking out, reacting as support, we're still most likely to drop first at those levels. We're still most likely to maintain resistance first at that levels, right? That doesn't mean that this is going to happen. I'm just explaining to you the most likely outcomes. We use very strategic confirmations at the overall levels, but in terms of success within this market, you need to be prepared for the most likely outcomes. It's not always going to work within that favor, which is why we don't blindly trade outcomes, but you need to be able to see the most likely outcome before you even enter a trade, and don't be blindly biased to it. But you need to have an understanding of what is most likely to happen. It's like, okay, the trend is it could be super bearish this week, but it doesn't make sense to buy puts at a good level that could be for puts into this week if it's earlier into this week, because the trend is saying we could spike first. But then later into the week, it could be a phenomenal level for puts if we top at that key resistance level and then it drops back down below levels. See, you have to understand the timing of bull and bear traps. If you look at the overall perspective of the week, there could be great levels for puts and great levels for calls, but in terms of the timing, it might not be the right time to get in onto the levels, which is why you must be able to understand where the bull and bear traps can get created. If the overall week could be bearish, when is the right time to buy puts at the key breakdown level? And when is the right time to buy puts at the key resistance level? If the overall trend could be bullish, when is the right time to buy the dip? When is the right time to buy the breakout for the break and retest level? And in terms of the situation, like I said, earlier into this week, we were swaying away from puts for a bounce first, and then we want to put to the higher level. And now in terms of the situation, we're at make or break resistance levels where we're leaning more towards puts at 559 if there's clear resistance at previous closing price. If not, then 563. And if we did buy puts at previous closing price and we took an L on the trade, we should be able to make it all back and more if we try puts at 563, right? So I'm telling you, that's the game plan. Those are the most likely outcomes. Now, I do have levels for calls because you're well aware. In terms of this video, I've mainly just been interested in puts towards previous closing price. And then if that reacts bullish, I'm looking at 562.50 to 563, strictly heading into tomorrow with the understanding of, okay, now the most likely outcome is, okay, we're at make or break levels. The bulls are trying to push it a bit higher, right? So there is a chance of a slight break of trend, but we could potentially drop first towards previous closing price if that reacts as a resistance. If not, towards 562.50 to 563. But you need to understand the bulls are technically showing signs of an overall attempted break of trend because it's so earlier into the week. We bottomed at the key support and we're already pushing well above the level. The key interest level for puts was towards 557. So technically, we're already seeing a break of trend where the bulls are trying to show up and flip the overall week bullish because we already hit 561 on a fucking Monday, which is extremely bullish for the overall bulls. So it's the understanding that the bulls are showing up. There is signs of a break of trend where the week could be bullish. But like I said, since it just happened so earlier into the week, I do have some interest in puts at the upper levels if the confirmations are there. Now, in terms of the calls, man, if you've been studying the content, the SPY has been having strong break and retest reversals at this key overall candlestick right here. When we form the green, red, green bullish candlestick and it drops back down to retest, and this overall trend reversal candlestick right here, it's been great opportunities for calls. So in terms of my main level of interest for calls, I'm going to be keeping an eye on the following. I'll keep an eye on this break and retest level right here that hasn't been tested at 554, right? So we had all this resistance right here on the SPY towards 554. Green, red, green is bullish. Green, red, green is bullish. And this is a key trend reversal level. If you go back historically throughout the 30-day, 30-minute chart, the SPY has been reacting very bullish on these break and retest levels when it retests for the first time, especially with like this red trend reversal overall retest. So a potential scalp opportunity I have for you for calls is it could be a nice scalping opportunity to buy calls once we test the 554s for the first time. So that's the first idea for calls is 554, right? And like I said, a previous closing price does react bearish. We go to 563. It's just in this situation, it's not the most ideal level to be aiming for calls at the level, but you need to react accordingly and decide if you're going to sit on that sidelines in the situation or just, and wait to trade for the next level, or you could take a potential trade. Just understand, man, you got to be a little bit cautious with, calls, but you got to be at higher levels. And you also got to be a little bit cautious with puts because there is signs of a break of trend where the bulls are trying to show up. It's just, we're so fucking earlier into the week where even if the bulls show up, we're still more likely to drop a little bit first to 554. So 554 is a key level of interest for calls of the break and retest strategy. If we're seeing support when that level is tested first with bullish confirmations on 30-minute chart, going to be buying calls there. Now, another key level of interest for calls is going to be key support at 547. If I'm seeing a strong bullish reaction at 547, going to be buying call options there, right? Now, if the SPY is maintaining below 549 later into the week, it's going to maintain bearish, especially if we're maintaining below 559. Basically, at this point, to see a strong bearish overall move, the SPY really can't even go to 563. If it just gaps up and goes to 563 and sells the fuck off, then we have a strong overall chance of going under 549 later into this week. But if we're just maintaining above previous closing price and we break above 563, there's no fucking shot. And it's going to be an overall bullish week where we explode up to fill that gap at 567. So like I said, this is like the key critical make or break point. Like this is like, we are setting up for one of the best opportunities to trade into this week, man. We're at such a key critical make or break resistance level, man. Like basically the true colors are getting ready to be shown if it's going to be an overall bullish or bearish week. And I did explain to you how there is some signs and signals where it's trying to flip bullish, but it's too early to tell. And to truly flip bullish, it's like it needs to hold above 559 and break above 563. If we break above 563, there's really no fucking shot, in a sense, for the bears to take any fucking control. And it's going to be an overall bullish week, unless it just falls off a fucking cliff if we go back under 559. But like I said, man, to just overall be super bullish into this week, you need a strong break above 563 and react to support, and we are likely to drop first in the situation that we're setting up in, right? So in terms of the overall chart, man, I'm just giving you some levels like later into this week, right? So 554, try to bounce first, break and retest. Next level below that is going to be this 550. Not too interested in trading at 550. Interested in maybe playing calls towards 547 when that tests. Levels below that, if we flip bearish into the week and stay under 559 to 563. Levels below that, like I said, are going to be below 547 is going to be 544.50, 542.50, 541, and 539. Auto buy level towards 539 to 541. Another thing to keep in mind is if we do have a bearish week where we're staying under 559 to 563, main idea in terms of, like I said, if we're gapping up, it needs to stay the fuck under 563 and then just sell straight off to 559 to be overall bearish week, right? But if that does occur, there's going to be levels to buy calls at more oversold levels in low 540 into this week. So I'm saying if we're staying under those bearish levels, I'll look for a scalp on calls at 554. I'll look on a scalp for calls at 547. I'll look for a scalp on calls towards, 542, 541, and 539, right? So as you can see in terms of the calls at this point, I'm mainly showing interested in terms of the game plans towards 554 and then the lower levels if we flip bearish. I'm being extremely careful in terms of timing, right? Because if there is a break of trend, calls could be good at the higher levels, but ideally 554 would be a great level in terms of a higher middle level to just buy calls at. But in terms of right now, it's like you just got to be extremely careful and meticulous with calls because we are extremely earlier into the week and we are at levels where we're more likely to drop first, even if SPY ends up having a bullish closing week and there is a break of trend, which again still isn't confirmed in terms of the break of trend, man. But you can see in terms of just key critical levels, man, what's really going to be key is the previous closing price. Like, take a look, man, 559.39. Look at all the support, 559, 559, 559, 558.50. So the point being is, man, if we're seeing strong support, a break, bottom wicks, bottom wicks, bottom wicks, green, red, green, a break, bottom wicks, bottom wicks, bottom wicks, strong slanted uptrend, green bullish candlesticks, higher fucking floors, break and retest. If that is all occurring at the previous closing price, that is very bullish. And as you can see, there's massive upside potential. If 559 reacts as a support level, the upside potential is going to be to 567 potentially. 567, there's a gap that's waiting to fill above. SPY is technically in the process of reversing at that gap from 500 and 50. There was a gap towards 550 to 551. It's trying to reverse the gap with the green bullish candlestick, but it is facing a way where it is bearish. So technically it's not the most bullish signal, but it is trying to explode and fill the gap. And we're so early into the week where it has plenty of time to try to go bullish, right? So bears got to show the fuck up basically tomorrow. If not, that's a big red flag where SPY's just going to go super fucking bullish. But I'm telling you, in terms of like timing, even if it is a bullish week, it makes the most sense for the bears to show up tomorrow. That's why I'm telling you, if I see key resistance towards previous closing price or towards 563, I'm buying puts. But in terms of this 559 level, this is what you need to understand, man. If 559 reacts as support, we're exploding up to 563. If 563 reacts as a resistance and we're forming higher support on a breakout and break and retest level, which would be towards, previous closing price, which would be towards 560 to 561, wherever the level is, but right around that zone, as long as we're forming the higher support, then we explode up to fill the gap at 567, right? So 559, 563, if 563 pulls back, break and retest level, if it holds the break and retest level, which would be towards previous closing price, slightly above it as well, towards, 560 to 561, wherever it is as well, right? Just look at the 1 minute chart, study where the big pullback was, take the high from the break and retest, right? In that situation, as long as it's holding the higher support, the break and retest level above the previous closing price and at the new break and retest level, it explodes up to fill the gap, right? Now, if we are reacting bearish in between the range of 563 to 559, or if we are just staying under 559, then the inverse is going to happen and we're going to see a strong sell-off, and the sell-off is going to be to the following. The most likely outcome is if we're staying under 559, we sell off to 554, bounce first. And then if it forms lower highs at 556, then we crack 554 and we drop back down to the low 550. And as long as the SPY is maintaining below 559 earlier into this week, we're setting up for a bearish week. As long as the SPY is maintaining above 559 and forming support at higher break and retest levels towards 561 to 562, we're maintaining for a break of trend for an overall bullish week, right? Based off the weekly chart, the trend is supposed to be bearish, but to be bearish and confirm bearish, we need to stay under 559 and we cannot break above 563, which is why I'm telling you, man, in terms of timing, the most likely outcome is we drop first. But for the bulls to show up with true fucking strength and just show true colors with this overall trend, it needs to hold above the previous closing price. And then we need to go to 563. And then when it pulls back, it needs to form higher support. If it does all those fucking things, there's absolutely no reason to be buying put options. If previous closing price is support, we go to 563, drop back down first and form higher support at a break and recess level. That is a zone where if we're holding in between, after pulling back from 563, there's no reason for puts. Only reason for puts is, like I said, if we had a strong gap up to 563, reacted as a resistance, or if we hit 563, flushed right under 559, formed resistance, breakdown, retest, and then tried puts. So just be aware of that. And like I said, man, previous closing price is make or break. If it reacts as a resistance, we're hitting puts in the morning. If it gaps up, we're looking for puts at 563. If it reacts to support, then we're going to 563 first. And if it's holding above, higher levels with the break and retest, then that means that the overall week is setting up for bullish and not bearish. But as long as we're really maintaining under 559, it's going to be a great opportunity for puts first. And then you could look for calls towards 554. But just understand, if we are maintaining under below 559 tomorrow, it's going to be a strong bearish trend day. If we gap up and maintain under 563 and then drop under 559, strong bearish trend day. So I gave you the information, man. If you apply this information with the 30-minute chart, just look for floors, look for support at the key levels, break and retest, for the call opportunities at the overall levels, look for resistance, look for bearish 30-minute candlestick confirmations at the overall levels for opportunities on puts, right? I explained to you the most likely outcomes. You need to be aware of what's most likely going to be expected first, right? Even if we're setting up for a bullish or bearish overall week, what's most likely to happen first? Is there going to be a bull trap or bear trap the next day, right? I explained to you in terms of most likely outcomes. We're setting up in terms of more likely, since we're so overbought for the micro, even if there's a break of trend and ends up being a bullish week, if we're breaking above 563 and form higher support, towards 561, even if that occurs and it's a bullish week and not bearish, the most likely outcome heading into tomorrow is a bull trap where we sell off first. And the levels I'll be watching, if we're not gapping up, I'm more interested in previous closing price for puts. If there's resistance, if we are gapping up, I'm interested in the higher level towards 562, 563. And then I explained with you the break of trend information and the importance of the 559 level to break down, react as a resistance, and to stay below 563 for the bears to take control. And then in terms of, if we're having a break above 559, we go to 563, drop back down, form higher support, then there's absolutely no fucking reason for puts until we go under 559. Until then, it'd be bullish in that situation because it's having a break and retest and forming higher support, right? Use this information. You're going to be printing so much money at the speed of fucking light. So in terms of the overall trades, man, let's get straight into it. I'm gonna walk you through this, man. Take a look at all of the trades that were made today. Inside of Team Roar, you gain access to a real-time zero-date options trading alert system. As you can see, this was the overall market game plan, right? So the game plan was going to be buying the dips above 550. In terms of last night's game plan, you're well aware, as long as we're holding above 549, SPY is bullish, and I gave you 3 levels in the zone between 549 to 551.50 to buy calls, and there was confirmations to be buying calls, right? I'm not going to be going all over all this, but inside of Team Roar, we have a very strategic trading alert system where it's not just buy and sell alerts, it's a system. If you want, you can take a screenshot of this. This is part of the Risk Management 101 with the overall system, right? With setting profit stops and to not use stop losses, right? So I'm not going to be going all over this. If you want to experience trading with us, it's the first link down below within the description. And in terms of the overall trades, take a look, man. First trade on the day, 543 SPY puts for 66 cents at 9:32 a.m. So if you go to 9:32 a.m., where we ended up buying 543 SPY puts, extremely far out of the money, very cheap, very low risk. We bought these puts at 66 cents at 9:32 a.m. So if you go to 9:32 a.m. on puts, you're going to see right here, this was the best entry on the puts that you could have got on the entire fucking day, man. Look, we were in at the exact lows. This is 9:32 a.m. We bought these puts right here at the exact lows. They went from 60 cents all the way to 116 cents. They went up 100% in less than 15 minutes. You would have had a phenomenal win, and that's more than big and green enough for you to walk away and call it a day. So since you're starting off green, and since you already had a win big enough to call it for the overall day based on trading with the overall system and on what we consider a big win, 100% is a nice win, right? In that situation, you walk away, you stop trading. If you choose to keep on trading, the most you risk is 25 to 50% of your gains. If you lose 25 to 50% of your gains, then you can't trade anymore because we're not going to risk going green to red. So the point is, due to the very successful market open morning trading session, losing was a personal choice on the day because in terms of the trading the system, you got to take the first trades. If we're red in the morning, we'll make it all back on the power hour trading session, right? It's very rare where we're going to be wrong on both of the sessions. We're either going to be right on the morning session or the power hour session. If not, then we'll just be right on both sessions. That's how it usually works, but we tend to be right the vast majority of the time. We have the highest win rate in the game doing this. But the point is, the first trade was more than green enough, and these are the option quote prices moving in real fucking time. It's like we're doing all the work for you. It was more than green enough for you to walk away. So in that situation, the whole team should have been green. The puts went up 100% in that situation at the speed of light. You're more than green enough to walk away. If you choose to keep on trading, that's your choice. And the most you risk is 25 to 50%. And if you give it back, stop trading because We don't go green to red on the day. And in terms of our trades, we don't go green to red. When we're up 15%, we set a profit stop. We get stopped out for overall profits. That's a phenomenal way to start your day where you're green enough to walk away. Now, next trade on the day, 10:04 a.m., right? We ended up buying 557 SPY calls for 43 cents a contract. So you go to 557 SPY calls for 43 cents a contract. Take a look. This is why you need to hold the plays. We tell you all the time, just hold the trades. If it doesn't work out, let it expire worthless, let it go to zero. I'm telling you, it's like even if we decide to sell a play for an L, it ends up working. That's why we just don't like doing that, because I'm telling you, 70% of the time when we are down on a play, it tends to come back to life and go in the money. That means if we're down 90% on a trade, 70% of the time, it comes back to life and it goes green. And when it goes green, we set a profit stop. Therefore, green to red is a choice. So if you just hold the trades and remove the stop loss, and the way we're able to not use a stop loss by not risking a lot is by putting in our entire R multiple, our entire max risk per trade within the option contract, right? So the most we risk is what we put in, which is the most we lose is what we put into the trade, right? So you could just let it expire worthless and go to zero. This is a great example of that. As you can see right here, we got in on this trade right here. As soon as we got in, it had a quick move. So if you look at the overall trade, take a look. We got in right here at 43 cents, 10:04 a.m. So we got in right here at 10:04 a.m. It quickly went from 40 cents all the way to all the way to 58 cents. So the trade went up like 40% plus. When you're up 15%, you set a profit stop, your profit stopped out. Yes, this small move right here, it looks like it's consolidating, right? As you can see, the option charts look very different compared to the stock charts. This looks like it's just consolidating, like it's not even going up. But if you look, the low is 41 cents, the high is 58 cents. And when we're up 15%, you set a profit stop. So the point is, that was a phenomenal win. But in terms of like holding, say you didn't set the profit stop, but you should have been profit stopped out if you follow our overall system. But I'm just trying to put things into perspective. Like if you just hold the trades, they come back to life 70% of the time. This trade for several hours didn't do much. It just kept on going up 40%, and then it just kept on selling off. So it just kept on going back up, to that 60-cent range multiple times for you to make 40%. But then eventually, and this happens a lot, when we're in a dead play, the biggest comebacks happen when they drop the lowest. It finally hits the lows on the day, and then it has the biggest comeback, and the contracts went all the way to 400 a contract. So if you set the profit stops like you're supposed to do, you would have made like a 30% win, and you could have done that multiple times. If you left runners, which you can do, you don't have to have your entire position size as your profit stop. You can have like 70% of your size as your profit stop, and then you could detach the other 30% of your position size where you're not profit stopped out. Leave runners, sell the runners deep in the money. Look, it went from 19 cents to 381 cents. And when you trade with us, you're going to see that this is normal. Whether the play goes up quickly 30, 40, 50%, even if it drops later, like 90% on the day, they tend to push up higher. But like I said, you still need to use a profit stop, because if we're up 30, 40, 50%, we're not going red, dude. If we're up 30% plus, you need to be profit stop the fuck out. Even like you need to be setting it at 15% plus, right? And you can always get back in. You could always get back in later if you wanted to, typically at a lower price, because as the day goes on, contracts tend to decay at times, right? Especially if it's not working within our favor. So that was another phenomenal win, back-to-back wins, where you could have called it for the day, right? In terms of that situation, you could have already been up potentially 140% on those two wins. Now, in terms of the next trade, look, 10:31 a.m., we ended up buying 5 SPY calls for 55 cents. What was the game plan? What was the most likely outcome? The most likely outcome was we're going to be buying calls heading into tomorrow as long as we're holding above 549. And I made it very clear, even if we are going under 549, that is considered bearish, but you need to be extremely careful with puts, because the most likely outcome is still a bullish recovery, which is why I said, even if we drop under level later in today, if it reacts bullish, buy the fucking calls, because it's a very dangerous time to buy puts, since it's more likely, even if the week is going to be bearish, it's more likely to spike first, because we're at such oversold levels where even if the week is going to be overall bearish, well, heading into the fucking Monday, the pattern said we could spike and fill the gap at 555 first, and it's most likely to happen at the oversold levels earlier into the week rather than later, because if it's a bearish week and the pattern says in terms of measuring the move that we're going to spike to 555 first, it's got to happen quick, then it's got to sell right back the fuck off, man, for it to make sense in terms of measuring the move and history to repeat itself with a confirmation. This is why you need to be aware of the most likely outcomes of the bull and bear trap timings. Like I said, the week could be overall bearish, but there's an opportunity to buy puts at support for a breakdown retest. And there's also an opportunity to buy puts for a breakout and retest. And if we're earlier into the week, for the higher resistance, right? If we're earlier into the week, then we're most likely going to be waiting for the higher resistance, right? Versus later into the week, if we top out at the higher resistance, then it's more safe because it's confirming that the week's already bearish at higher resistance levels, that then it's going to try to crack support, closing the overall week bearish. And then vice versa for bullish week, do the inverse of what I just said, right? You need to be aware of that, man, because there's people out there, they have an understanding of bullish and bearish trends, but they lack the understanding of the micro timing. Like someone will be like, it's going to be a bearish week, but should we buy puts at the key support level first, or should we wait for the upper resistance? And then if it tops out upper resistance, we could try puts at the upper resistance level. And then if it works and it sells back off to the key support, then later into the week, we try puts for the strong bearish week instead of just getting in puts right away at the key support level, right? You need to understand how to time trades properly and how to time trends properly. There's a right time to trade the overall weekly trends. You break it down by the micro with the daily chart and the 30-minute chart, which is why measuring that move was so fucking important. But look, 10:31 a.m., as you can see, we ended up buying SPY 555 calls for 55 cents. So you go to 555 calls for 51 cents, you're going to see, look, third win in a row. This is where we got in. We got in right here at 10:31 a.m. Look, 55 cents, right? 55 cents at the speed of light. We're going to 89 cents. You see that? We are in right here. In 3 minutes, it goes from 50 to 90. That is another massive win. This means you could have been up over 240% on the first 3 trades within the first hour, which were all wins. 3 wins in a row with a 200% plus potential profit return is more than green enough for you to walk away and call for the day. If you choose to keep on trading and risking more money, the most you risk is 25 to 50% of your gain. If you give back those gains because you chose to keep on trading when you could have walked away, then you have to force yourself to stop trading because we're not going to go green to red on a day. So look, this is the 4th win, 11:18 a.m. We ended up buying 556 SPY calls for 47 cents. You see how we keep on buying those fucking calls when there's bullish reasonings at the overall levels with the game plans? So take a look, man. As you can see right here, this is where we bought calls. Every single time we're buying calls, it just keeps on pushing the fuck higher. This is where we bought calls, right here, 11:18 a.m. The high is 51 cents. Look, it quickly goes to 80 cents. And you see how on a lot of these trades on calls today, it kept on dropping back down. This is why we say set the profit stops. But then eventually, the crazy trend kicked in. And when did the crazy trend kick in? Towards later into the day when the contracts were towards all-time lows, where they were towards intraday lows on the overall day, new lows, when everything was looking fucking hopeless for fucking calls on these out of money contracts, and then boom, that's when they had the biggest gains. Happens all the time, which is why we say to leave runners. All of the trades went up like 50% first, and then they became dead plays where they just kept bottoming towards our level, and then when they dropped lower, they had their biggest moves. This happens all the fucking time, man. That is 4 wins in a row. Who do you know is winning this much? Who do you know is giving you the most self-sufficient plans, the best curriculum within the stock market to print the levels, man? We're the best to do this. That is 4 massive wins in a row. You could have been up at this point over a 300% profit return with 4 massive wins in a row. And you could see, set the profit stops. This is a real trade alert system where we tell you when to set the profit stops. So look, this is another win. We just keep on winning. It's unlimited fucking winning, and it's unlimited fucking printing. It's non-fucking stop. Who do you know is taking advantage of every winning opportunity in the market where you just trade non-fucking stop and you just keep on winning with the highest win rate, lowest risk, and the most amount of trades on the day? If you take smaller position sizes that have big percentage wins and you make multiple trades on the day with a cash account, it is a safe way to not only gain experience trading, because to become a better trader, you have to trade a lot, but it's a safe way to grow your account like fucking crazy because the position sizes aren't big. And since the position sizes aren't big, you're not risking a lot. But if you're making a lot of trades and the trades are big percentage gains, that's going to add up to massive gains without risking a lot. And another way that we increase our winners is by adding to winners. Adding to winners and doubling to tripling our position size will double to triple the gains. Now, how do we protect the extra risk that we're putting into, right? Because if we're doubling or tripling our position size, quickly adding to a winner when we're up 5 to 20%, how do we protect that new exposure to risk? We set a profit stop. If you set a profit stop, it is impossible for you to go green to red in that situation, right? If your average cost goes up a little bit and your profit stop and price is above your overall average, you get stopped out for profits, making green to red a personal choice and the bigger position size is going to increase your gains. And when we time the trades right, and there's just a straight uptrend like this, or if there's just a straight uptrend, like this, or if there's just a massive straight uptrend like this, we don't get profit stopped out until there's some sort of big pullback. So what I'm telling you is there's situations, and this happens all the time with our trades, well, they'll just go up. Look at this move. 30 cents to 200. You wouldn't have been profit stopped out until 150. So the way we make a massive percentage of our gains is not only by winning a lot and having a high win rate and making a lot of trades, but it's adding to winners. Like let's say you bought calls right here and then you added as it was going up here, you wouldn't have been profit stopped out until here. And the way we protect our gains, right, is by moving the profit stop up higher. So if you're in right here and then you add right here, you're not profit stopped out until right around here because this is where the big pullback was. Sometimes it's not going to have a big pullback until it goes up multiple 100% profit return. During power hour, it could go straight up to 500 to 1,000%. And since you're doubling and tripling your position size earlier into the trade, it's going to double and triple your gains. And setting the profit stop, green to red is a choice. You get stopped out for profits. And then sometimes the trade will just come straight back down and you'll have smaller gains and you get profit stopped out quickly. But you increase your position size, which is going to help increase your overall gains. But on situations like this is how you get super rich at one fucking trade. You have a nice trade that goes up multiple 100% very, very quickly. It tends to happen at market open and power hour trading. Those are the two sessions where you can make the biggest percentage gains at predictable times, especially during power hour. But man, best situation, you have something like this where it goes up multiple 100% quickly, and then you quickly add to the winners, and then you set your profit stop, and then as it's going up, you move your profit stop up higher, and then once it has a big pullback, you get profit stopped out in between the pullback, right? So, if you were setting a profit stop, you would have been profit stopped out right around here towards like 160, not all the way down here towards 130, right? So you get what I'm saying, man. That's how, in terms of real-time zero-day options trade alert system, that's the method to get fucking rich. I literally just shared it with you, man. And just don't use stop losses. Most you put in is your max risk per trade. When you add to winners, just move the profit stop up higher. When we're down 90% on a play, we just hold the trade, don't sell for a loss. And when we are down 90% on a trade, we tend to be right about the trend. So instead of adding to a loser, we might just buy a second strike, and the second strike will be timed a lot better, right? So what I'm telling you is in certain situations, like we could be in calls like right here, let's say like towards the peak, let's say we're in calls right here towards 80 cents. And if it drops all the way to 30 cents, we'll still hold that trade. And if we're right about the trend, it comes back to life and goes green, we set the profit stop. But if it drops like 70, 80, 90%, in certain situations, we buy a second strike, and the second strike will literally be in towards the lows with a much better entry, and then it will just go straight the fuck up for massive gains. So instead of adding to that previous strike and adding to the loser, which puts you in a situation where you can lose more money and you can't protect it because you can't set a profit stop on the overall loser, right? You set a stop loss, you get stopped out. Instead, we just buy a second strike, and a second strike tends to work like fucking crazy, especially if we're right about the trend, right? And we tend to be right about the trend. So you see, we have a very strategic system, and what makes this possible is far out of the money zero-day options contracts. We don't have to add to losers. We could just buy a second strike, which is so much better than adding to a loser. If you add to a loser, it increases your risk of losing, and you're already down. It's like you're adding to something where you're going to lose more money. If you buy a second strike, you're putting yourself in a new position where it could be at the potential lows and be a phenomenal opportunity to make multiple 100% profit return. I'm telling you, averaging your cost down is not the solution on a loser. The solution is to put in your max risk per trade where you don't get stopped out and you have the entire day for the trend to work in your favor to then eventually, if that trade drops 90%, it comes back to life and it goes up 15%, and then you get profit stopped out. And then as you're down 90% on that overall trade, consider buying a second strike, time it much better towards the lows, and you make the biggest percentage gains on that second strike, but the first strike is still green as well. And then you add to the winners, man. So like I said, I'm literally explaining to you how to get fucking rich trading zero-day options. It's a strategic alert system, man, that we've created. Now, in terms of the next fucking play, right? So we went over to 557 calls, right? I made it very clear, man, in terms of, 557 calls right here, 12 p.m. You go to 557 calls, 12 p.m., right? So if we go to this overall trade, you're going to see 12 p.m. on, 555 calls at 12 p.m., right? So, in terms of this trade, we got in right here. This is 12 p.m. Look, we're in at the exact lows. Look at this, man. Do you understand how many wins that is in a row? That's 5 massive fucking wins in a row. Who the fuck do you know is doing this with the most strategic alert system? I'm literally showing, man. G-Roar, he's got over a decade of experience. He's a multimillionaire. This is fucking amazing, man. Do you see the results? Look at this. 5:55 SPY calls for 57 cents a contract, 12 p.m., man. Look at this. The exact lows. We are in on calls at the exact lows. It goes from 60 cents to 140 cents. Who do you know is giving you the best game plans a day before the market opens, giving you an opportunity to be self-sufficient with the curriculum that I've created, inviting you to a zero-date options trade alert system secured private organization where all we do is win, and we win in the cheapest, lowest risk way possible with the best trading system. This is not just buy alerts. This is the most strategic trading system on the fucking planet, man. Do you understand how many traders we have that are optimizing to trade alongside this overall system? Everyone wants to master this style of trading and this overall system for trading. They want to all apply it to their style of trading, right? It works and it prints like fucking crazy, man. Look, bring your profit stops up closer. You see? Set your profit stops right here as the trade works in our favor at 12:19 p.m. You're going to see, set the profit stops right here as the trade works in our favor. And then as it starts to go up within our favor, bring your stops up closer. You move the profit stop up higher to ensure that if the trade has a big move against you, you get profit stopped out in between the move rather than stomaching a big pullback that can wipe out the vast majority of your gains. And then look, it just keeps on going up, calls up 50 cents, man. That's 5 massive fucking wins in a row. If you are fucking red today, you shouldn't even be trading, man. Like with the amount of fucking wins we had in a row, and these are massive fucking wins, that trade right there, you literally could have been up 350% on the day with 5 massive wins on a row, breaking down the overall trade straight the fuck up. See, that's what we love, man. I tell you, this happens all the time. When we have trades that go straight up, the way to get rich is to quickly add to the wins and set the profit stops to protect that new risk because you're putting in an extra 1 to 2 R multiples to double to triple your gains. And then from there, like I said, you move the profit stop up higher and you would have been profit stopped out right here in the 120s. Why 120? Because it finally had a big pullback. Went from 140 to 120. It's a decent pullback. You would have been profit stopped out in between this pullback, moving your profit stops up higher, right? So in terms of the next trades, man, as you can see, man, I mean, look at this. 5 for 5 on the overall day. That's over $11,000 profit, man. And that's just within the first 3 hours of fucking trading, man. Right? So fucking phenomenal results, man. I mean, who's fucking printing like us, man? Look at the fucking contracts, man. These contracts, 200 and look at the calls. Calls 250, 5 a contract, 555 calls, buying those for fucking nothing. 556 calls, 190 a contract, 557 calls, 138 a contract. Do you understand how consistent we are in terms of winning? It's just unlimited fucking winning, unlimited fucking printing. Look, back from the fucking break, look at this. Right here. So if you go to trade at 2:41 p.m., 560 SPY calls for 52 cents a contract, right? You go to 560 SPY calls right here, 52 cents a contract, right? At 2:41 p.m. So you go to 2:41 p.m. This is where we got in on the overall trade, right? You're going to see right here. As soon as we got in, the calls went from 60 to 30, right? So the calls dropped 50%. Now, this is one thing that you need to be aware of zero-date options trading. Our trades are focused on trading the trend. So you should never laugh or you should never be fearful if as soon as you get in on a trade and it drops 50%. Because we are trading the trend. So if we don't time it right, and in terms of zero-day options, it's extremely hard to time perfectly, which is why it's best to trade the trend, because if you trade the trend, you don't have to time it perfectly. If you don't time it perfectly, you're not going to make the biggest percentage gains. But if you get a good overall entry, you're going to make big gains because zero-date options have the biggest potential for biggest percentage gains, especially if you're buying far out of the money option contracts that are cheap, but not far out enough to where they're not going to go deep in the money. If they have the potential to go deep in the money, which our trades do, then even if you don't time it right, even if it drops 50% plus from your entry, it's still going to be a phenomenal winning opportunity as long as you're right about the trend. And like I told you, as it drops, you can buy a second strike if it makes sense. Sometimes we do it, sometimes we don't. We just hold the trade regardless though. So, like I said, you should never laugh or you should never be fearful trading alongside us if as soon as we enter a trade in a couple minutes it drops 50%, right? Especially during the most volatile times of day. You know, if we enter a trade in the morning and it drops 50% right out the gate, it's like, dude, we have the whole day for the trade to come back to life. We hold our trades, we trade the trend, and the market just fucking opened. That's why in terms of my trade, the first trade I took on the day was calls. It dropped like 30 to 50% quickly. And then it came back to life and the calls ended up going up multiple 100%. And people were literally laughing in the chat on my first trade. In terms of my own personal trading, I ended up going 1 for 2 with my trades. But G-Wars trades, I mean, we fucking printed off of those as well. It's fucking phenomenal, man. But overall, this was a fucking amazing, phenomenal day to be trading. If I would have just held the calls, it would have been a massive fucking win. But I decided to just cut the play and switch to puts, and I made back my loss on the fucking calls. So I still won, even in terms of losing with a 50% win rate in the morning. But overall, we fucking crushed it. But obviously, I mean, in terms of G-War, I mean, he did fucking insane, man. Fucking 8 for 10, and the trades are fucking amazing. Look at this. So right here. We are in right here on 560 SPY calls for 52 cents a contract, right? At 2:41 p.m. You go to 2:41 p.m. As soon as we get in, it drops 50%. And then it goes from 60 to 30, and then look, comes back to life, goes to 140. This is why I tell you all the time, man, especially if it quickly happens, just hold the fucking trades, man. It's not a big deal if we just enter a trade and it drops 50%, especially during volatile times, because we have the whole fucking day for it to work. So that worked. That is 6 for 6. That is 6 massive wins. 3 of those wins, you could have made over 100% plus. It's like, dude, I don't see how anyone could have been red today. With that amount of wins in a fucking row, that is 6 massive fucking wins in a row. And then look, after 6 wins, we finally had an L. So like I said, not every trade is going to be a win, but you need to understand the system. The system starts with our first trade. If the first trade is a big win, that is green enough for you to walk away. If you choose to keep on trading, that means you choose to keep on risking your profits. If you get back 25 to 50% of your profits, then you have to force yourself to stop trading because you're not going to go green to it on the day. If the first trade is a big win or 2 small wins in a row, that means that we are successful on the day no matter what. In terms of risk management 101, if we have 1 big win on our first trade, or if we have 2 small wins on our first 2 trades, we are green enough to walk away. That means if we choose to make 20 fucking trades, right? So obviously if you have a large account, you could choose to risk more and trade more. But if we choose to make 20 fucking trades after that situation and all the trades are fucking red, it doesn't fucking matter because there's a risk management system that ensures that if we give back half of our gains at most, we have to stop fucking trading, right? And everyone has different account sizes, right? But the point being is the win rate does not matter, especially in a situation where if the trades are green first. So we had 6 fucking wins first, right? I had a win before this. And even on my L, some people held it. That was another win. So it could have been considered 2 wins. Like technically we were 7 for 8, or you could say even 8 take. Because like I said, a lot of people just held the trade because they know to hold the fucking trades, man. I was in on calls in the morning. It dropped like 30%. I was like, dude, it's going to crash first. I'll just cut the fucking calls, buy puts, and then maybe I'll consider calls later in the day. And then once GWAR was starting calls, we just all kept buying fucking calls, man. It's like sometimes you don't want to hold the trade. Sometimes you might just get out and just buy calls at a lower price. But it's just recommended to hold that first strike. And then if you want to keep buying more calls, just buy a second strike later on when it makes sense and it's cheaper and it's lower risk with a better confirmation at a better time, right? So anyways, man, point being is, look, man, let's all be logical here with the system that we created because this doesn't rely on win rates. I already explained to you, we could be successful with a 10% win rate. If you make a 1,000% win in the market, that means you can have 9 consecutive losses in a row and still be up 100% plus. So the win rate doesn't matter. We don't win every single fucking time. But the way our system is created, it doesn't require us to be successful winning every single time. If we go 8 for 10, 9 for 10, it doesn't, the losses don't matter, dude. It don't fucking matter. We're up so fucking much. This doesn't matter. So yes, we do have L's, but we still have the highest win rate, and we make the most amount of trades on the day. If you trade more with smaller position sizes, it increases the gains, and it puts you in higher probability situations to make bigger percentage gains. I showed you last week during the Power Hour trading session, the first 2 trades from 3:30 to 4 p.m. We had this Power Hour trading session. This is a brilliant point. We had 2 trades on SPX. They were both 100% losses. Do you know how many fucking people out there don't understand how this works? They'll be like, dude, I was trading SPX. I lost 100%. I'm like, dude, the contract's for $50. You can just buy one fucking contract, risk 50 to make 200 to 500 to 1,000 sometimes. The first trades we took on SPX last week during one of our Power Hour trading sessions were both L's. We lost 100%. Everything we put into those contracts, gone, which could be like 2% of your account, 3% of your account. Obviously, if your account's smaller, you're going to have to risk more. But the point is, 2 losses. All that money's fucking gone at the speed of light. Gone, like that. And then the third trade we made, which wouldn't have happened likely if we didn't take those 2 losses first, was a 1,000% win. Sometimes you have to lose first or have a low win rate to make a 1,000% win. The only way you're going to make a 1,000% win is if you trade more. You think you're going to make a 1,000% win if you just make 1 trade a day? Very unlikely. You have to put yourself in profitable situations to make the biggest percentage gains. There's traders out there who are extremely successful trading 0 dates, and they just have a 30% win rate. But like I said, we're the best. We have the highest win rate, man. I just showed you. Basically, we had 8 fucking winning situations. It was 7 for 8 in terms of like I said, I cut the calls. But if you held and just followed the system and just held the play, it would have been a massive win on fucking calls. I called out calls literally directly towards market open at 9:41 a.m. So with the overall system, technically it's 8 for 8, but in terms of what we did, 7 for 8 already. And then we had one fucking L, which doesn't fucking matter, man. We're so green already. So next fucking trade, green as fuck. Let's buy 555 SPY puts for 43 cents a contract. You need to understand, man, 0-day options gives you unlimited farther money options. And the win rate does not matter, right? The win rate does not fucking matter, dude. It doesn't matter if you have a high win rate. It genuinely does not fucking matter. It's nice to have a high win rate like we do, but it doesn't fucking matter, man. You need to be focused on becoming profitable first with a strong foundation that allows you to be profitable with a low win rate. Any professional trader out there who's good at trading optimizes for a system that allows them to be successful with a 30% win rate. It's like, dude, if you make 3 trades and 2 are 100% losses, all you need is a 200% win. Every single day, we're making 200% wins on one trade. It's like, we can literally be profitable with a 33% win rate. This is why we're screaming and fucking shouting on people. I'm like, dude, how the fuck are you red? Fucking 6 trades, all wins in a fucking row, 1 fucking L, multiple 100% profit returns combined. How the fuck is anybody red? It doesn't make any fucking sense if you're fucking red. So 555 SPY puts for 43 cents a fucking contract, right? This right here, as you can see, was at 2:55 p.m. If you go to 555 SPY puts, so if you go to the puts right here, you're gonna see as soon as we get into the puts, look, this is as you can see right here, it's 2:55 p.m. We're in right here, 45 cents. Look, it goes up to 68 cents, right? And if you look at a lot of the trades that were made today, they didn't just go straight up. We had that one trade on calls that went straight up and it's phenomenal, right? And we set our profit stops in a way where we capture those moves. But the point is, it's not going to happen like that all the time, which is why you need to set profit stops earlier into the trade and move them up higher so you don't get back the bulk of the gains. Sometimes it goes straight up. Other times it just sells straight back off to our initial entry after going up 30 to 50%, right? So keep all this in mind. Profit stops will allow you to take advantage of the overall massive fucking wins, man, in a safe way. Now look, another fucking win, right? Look at this, man. It's just nonstop fucking winning. How the fuck can you be red with this many fucking wins, man? Who do you know is showing you this many wins in a single fucking day, every single day, showing up with the highest percentage win rate, decade of fucking experience, multimillionaire? Who do you know is showing you this, man? Every single day. Do you understand? This is like normal, man. Like, look at, like, this is just normal over here. It's normal to win this much over here. It's normal to win this big over here. This is like normal behavior. It's like, we're used to it. It's like, dude, this is normal over here, right? Look at this. 561 SPY calls for 37 cents, right? At 3:13 p.m. So if you go to this trade, this was the final one overall. You're going to see right here, this is where we ended up getting in. So we got in right here. This is where we got in, right? Towards the exact lows. We got in right here, 40 cents. It quickly dropped to 15 cents. The play's down over 60%. What do I tell you? It doesn't fucking matter, man. It does not fucking matter. Do you understand why we tell people to never use stop losses and to set profit stops? It's like, dude, do you understand how much money we would have not only lost, but we would have missed out in terms of gains if we just held the trades? This is why in terms of the system, we've made sure that you need to put in, the most you put into the contracts is what you lose. Whatever you put into these contracts is what you're going to lose. That's the beauty of options. Whatever you put into them is the most you can lose with the naked 0-day options, right? So the most we put in is our max risk per trade. And when we do put in 2 to 3 R multiples instead of 1, that's called adding to winners, and setting the profit stops protects the new average cost, right? It's the beauty of adding to winners and setting a profit stop is it allows you to take on bigger size without really risking bigger size. It's like you're putting in more size, but you're not really risking that because the profit stop puts you in a situation where you're not going to go green to red. You're going to get stopped out for profits, even if your average cost increases by a little bit, right? So look, it went to 94 cents. The trade went up 150%, right? And you would have been profit stopped out right around here. You would have been profit stopped out in the 70 cents. 94 to 70 is a big enough pullback. You would have been profit stopped out right here. So if you held the trade, and then once it starts to spike right here, you set the profit stop, boom, your profit stopped out right here, not all the way down here when it comes right back to our entry. So look, man, who do you know is showing you this every single day? Are you awake? Do you understand this is the best 0-day options trading alert system on the fucking planet? Do you understand every single day we show up and we alert the most amount of wins and the biggest amount of wins every single day? Nobody else on this fucking planet is doing this. There's not a single other person out there. There's not a single other group out there that is winning this much and this big in creating strategic systems for you to enter trades that are cheap, low risk, with the biggest percentage gains in the fucking market and strategic systems. I already explained to you all the aspects in terms of the strategic systems with risk management. When we're down on a play, 70% of the time it comes back to life. Buy the second strike instead of adding to the loser. Add to the winner, set the profit stops, move the profit stop up higher. You need to understand this is the best 0-day options trade alert system on the fucking planet. You will not find another alert system like this. You might be able to find buy and sell alerts. You might be able to find education out there. But in terms of a system that makes you money in the best way possible, that is cheap and low risk, not only for small accounts, rich people prefer to trade this way because rich people who are good at trading optimize for the best style of trading, which is far out of the money 0-day options, right? And they optimize for a situation where it's cheap, it's low risk, and has the biggest percentage gains. And like I said, no stop loss is needed. Most traders use a stop loss, and when they get stopped out, they lose an R multiple. We lose our R multiple just as they lose their R multiple, except with us, we have the entire day for the trade to go green to set the profit stop, and we don't get stopped out. And if we're trading the trend, which we do, 70% of the time, when the trade drops, 90% plus, it's going to come back to life. So for those of you who are listening to what the fuck I'm saying, and if you agree with it and you're like, dude, this makes perfect sense. These guys are doing the complete opposite of what everybody else is doing. You need to understand everything I'm fucking saying is going to continue to happen. I'm not just going to manifest this. It's just going to keep on fucking repeating and keep on fucking happening. Literally, this entire year, you're going to see every single fucking day, everything I'm showing you, it's going to be the same thing. And the results are just going to get better and better. This is normal. Do you understand? These results have become so fucking normal. It's like every single day, it's like, oh, today we had 10 wins and only 1 loss. Oh, yeah, that's normal. Yeah. 1,000% on the day. Oh, yeah, it's normal. We'll do it again tomorrow. Yeah, it's normal. We're the best. Like, dude, you need to wake the fuck up and get in here. If you are serious about making fucking money, click the first link down below within the description and join our secured private organization, because I'm telling you, this is the best time to fucking join, and nobody is doing this, and we are the most consistent in fucking doing this, and we just keep on pushing for new all fucking time highs. The group right now is at all-time fucking highs. Team Roar is fucking massive. Every single day on WAP.com, out of the tens of thousands of companies on WAP.com, we are ranking in the top 100 most money fucking made. The company is fucking massive. We have many multimillionaires in here, and all we do is fucking print, man. We print at the speed of fucking light, non-fucking stop, man. So, for those of you who are serious about making money and trading alongside us, it is the first link down below within the description, man. Look at the fucking results. What did I tell you in terms of my portfolio? My portfolio is now up 171% in terms of March. We finished off March very, very strong within the green, just as we expected to finish the month very strong in the green. Look at this. We got another member who recently joined. Look at his overall month. During March, his portfolio is up 180%. He's up more than me percentage-wise, man. Do you understand? Last week, we had a member who quadrupled his account, up nearly 400%. Look at this, man. $1,000 profit. The guy just joined. He's up $1,000. It's like, dude, do you know how many people? I've seen people come in here. Look, this is very real. I mean, this is a flex in a sense, right? Think about it like this, man. It's a monthly fee to join the group. I've seen people, they've joined exactly right before the market opens. Because typically every single day in Team Roar, and we're known for having the best trades during the market open and power hour trading session, and those are the biggest percentage gains you're ever going to see with the cheapest, lowest risk with 0 dates. I've seen people join our group right before the market opens, and what they'll do is they'll take the morning trade, and the morning sessions tend to be right, like 8.5 to 9 out of 10 times. The morning sessions are fucking amazing, and the fucking power hour sessions are fucking incredible too, but the morning sessions are truly fucking insane. In terms of like morning wins, I've never seen anyone win this much and this big on the morning trading sessions, but the point is, I've seen people join our group right before the market opens, and within their first fucking minutes being in here, they make back multiple the cost of what we fucking charge. I'm sitting here saying, man, this is a good fucking investment. You can join the group and make your money back for the entire month within the first couple minutes on your first fucking trade. Like, dude, get the fuck in here if this is what you want. If you want a secure private organization with the best winning trades and the best 0-day options trailer system, I'm showing you. Like, how the fuck, anybody watching this video, how do you think you're going to be able to outperform us? I'm showing you what a decade of experience looks like, what multimillionaires looks like. I'm showing you, like, how the fuck do you think you're going to outperform this? Do you understand? Like, people are like, man, what does a decade of experience look like with a multimillionaire? I'm showing you. Every single fucking day, it's consistent big fucking winning. Nobody is showing you this, man. Do you understand? Like, if you're wondering, like, man, what's the fucking real deal look like? I'm showing you every single fucking day what we do, man. And I'm telling you, people, like, that's a big flex to just join the group, risk a small amount of money, and make back multiple months of the cost to stay within minutes. They're like, dude, I remember this one message. This guy's like, I joined this group 30 seconds ago and I made $500. It's like, man, this is the best investment fucking ever. And we teach people how to keep the money. You know, it's not about just making fast money. You keep the money, compound your account, and cash out within time. Look, man, like I said, we create the best risk management systems. So this is another member. So his account, I think he had like 3 to 5,000. He started off with a smaller amount of money. It was like a couple thousand, probably around 5,000 or something like that. I don't know the exact amount, but it's documented within the group. He got it up to 60,000, and then when he hits a certain number, so for him that was around 60,000, he cashed out, and then he restarted with a small account. So look, some people, they'll flip a couple thousand into like 25 to 50,000, and then they'll reset. One guy, he'll flip a couple thousand to like 50,000 plus, and then he'll reset with 25,000. This guy ended up resetting with 5,000, right? So this is what a lot of people do. They keep starting with small accounts, and when they flip it to tens of thousands of dollars, they cash out, and then they restart with a small account, right? So it's like if you have $5,000 and you flip it to 50,000, it's like you now have 10 small accounts. They cash out 45,000. They stack the 9 accounts in their fucking bank, do what they want with it. And then if they blow up one of the accounts, they can reuse, one of the 9 accounts that they had left, right? But the point is, it's like, dude, people in here have not only figured out, like, put it this way, man. There's people in here, if they have a couple $1,000s, I would say at the bare minimum, 6 to 7 times, they can multiply it. They could 5 to 10x it. It's like the win rate doesn't even fucking matter, man, because the percentage gains are so fucking big, man. It's like if you could turn 5 into 50, you can literally lose 9 $5,000 accounts, and then that last one you flip from 5 to 50, boom, it's like you're back right where you're at. But another strategy that some people do with zero days, like I said, you can do anything with this style of trading. You can literally do anything with this style of trading. Another thing that some people doing is they just keep on compounding their account. So some people, instead of like cashing out towards like 50, a good amount to grow it to is like, man, I'm telling you, towards 200,000. If you're wondering like, man, what is such an amazing amount to be trading with? I'm telling you, like 150 to 250,000, that is a good sweet spot where once people hit that, then they just start cashing out. And some of them, they'll just trade with it. They'll trade with $100 to $250,000 account instead of resetting with smaller amounts. And then what they'll do is they'll just cash out daily. So think about it. They'll trade with 200K, and they can, and then on certain days they can make like 5 to 10% of that, and then they just cash out daily, right? And then on other days they can make massive wins. They can make 20, 30, 40% of that. Like I said, there's certain days, like I said, how do you make crazy returns? Like how can you make a 20, 30, 40, 50% return on your account trading with 6 figures in a safe way? How can you do it? And I'm telling you, this is how you do it. Listen, you make a lot of trades. We're not risking a lot in our trades. So if you make more trades and you're winning on those trades, you can make big percentage returns on your overall portfolio. So like I said, how do you make big percentage gains on your account without risking a lot? Make more trades. More trades means more wins if you're good. More wins means more profits, right? And we're taking small position sizes. How else do you do it? You have a high win rate, that helps as well. But how else do you do it? Add to winners. Add to winners increases the gains double to triple. It also increases your position size. So how do you protect the new risk that you're adding on? Set a profit stop. Setting a profit stop ensures that you get stopped out for profits even if you add it to wins. If it increases your average cost, one small move overall in your favor, or the overall trade should be above your new average cost in a sense, quickly add to the winners, get profit stopped out. Sometimes you get profit stopped out quickly, but even if it's a small win, profit stopped out quickly, it's going to double to triple position your gains. And then sometimes it's going to go straight up multiple 100% profit returns, right? And then another way where in terms of massive days, if you're making many wins on the day and some of those trades are just going straight up to where you're not profit stopped out until when you're up 100 to multiple 100% profit returns, those are going to be massive days. Like I said, there's been trades, there's been days. So I've seen G-Roar in terms of like consistency. I've seen him flip his accounts from 50 to 70% on a single day returns. And keep in mind, we're not risking a lot to do this. I'm explaining to you how we're not risking a lot doing this, right? Because the position sizes aren't big. We have high win rates. We make a fuck ton of trades. And since we're trading more, it puts us in situations where even if we do have a low win rate, we have the highest probabilities to make the biggest percentage gains. Like I said, man, we're hitting 200% returns like it's nothing. And every single week we hit 1,000% returns. So if you do the fucking math, trading more is good for us. Even if we are experiencing an overall week where we're losing more than usual, it's good for us. Because like I said, if you have 3 trades, 2 are 100% losses, 1 is a 200% win, you're still fucking green. And we're hitting 1,000% wins, and we're hitting 200% wins like it's fucking normal. So it's like, dude, trading more is a good thing for us, and it increases our overall gains and puts us in higher probabilities, right? But I've seen days where G-Roar normally he'll have days where he could just make 30 to 70% like it's nothing. And then on his big days, if you want to know, like I've seen him have days 2,200%. I've seen him make a 2,200% return on his account, not taking massive risk. And I'm telling you, it's possible because I told you there's some days where if you add up all of the gains on our trades, it's multiple thousand%. We've had many days this year where if you measured our overall gains, it's in between 2,000 to 5,000% net positive returns with all of the wins and losses combined, right? We have some days where, the trade doesn't drop until it's up multiple 100% profit return. Then we're finally profit stopped out, right? And then we always look to leave runners to sell deep in the money, right? So you get the point, man. I'm explaining to you how to get rich fucking quick in a safe, cheap, low risk way possible. And some days are going to be so big where we make multiple 1,000%, man. It happens. And we stick and we follow through with the overall system, right? So, explain to you the ways on how you're able to make massive gains on your account by compounding it as well. That's another way. But you can make massive gains on your account by doing what I just said without risking a lot of money, man. That's the goal. The end goal as a trader is how can you make the biggest gains on your portfolio in the quickest period of time in the safest, lowest risk way possible. And everything I just explained to you aligns with that goal. Options give you options, but far out of the money options give you the most and unlimited amount of options to create any system you want. Like I said, some people prefer to just reset their accounts 5 to 50K, reset it back to 5K. Some of them, they want to get to 150 to 250K. And then instead of resetting the account, they trade with that amount, right? And what they'll do is they'll just cash out daily. So in that situation, if your account's 150 to 250, a lot of people, instead of compounding it, they'll just cash out daily. Some days they'll make 3 to 6% on their account. Other days they might have a big day where they make 20, 30, 40%, right? Obviously, if you risk more, you can make more too, but we're not focused on that. We're not focused on taking on massive more risk to make more. Compounding interest allows you to get rich within time. And the way we trade, you shouldn't even be taking massive risk, man. If you're in our group trading with our system and you're taking massive risk, you should genuinely be ashamed of yourself, man. If you're not optimizing for the long term, you need to understand, man. It's like, if you look at our group, you could think about it like this. Technically, if you're a trader, you have some money to trade with. I understand it costs money to join the group, but if you look at it as an investment, technically, it's free to join the group. It's literally free to join the group. But what I will say is, even though you're paying money to join the group, it's technically free. Because like I said, you just make your money back on the first trade easy. But what's not free is to stay in the group. For you to stay on a monthly recurring subscription, you need to understand, man, this is the most competitive business, and in terms of trading, this is extremely hard to master. It's going to take time. It's not free to stay here, man. If you trade like a fucking degenerate and you take on big risk, one of the most disrespectful things you can do in terms of trading with us is taking a big risk, man, because we've created a system that's just already so cheap and low risk, and you have time and you can compound your account, and it's affordable as well to join our group. It's like, we're not just attracting rich people. It is affordable for small accounts. It's reasonably priced. It's not the lowest, it's not the highest. It's fairly priced in the middle. We can charge a lot more and people will still join and stay with us. In terms of the people who stay with us the longest, it tends to be some of the people with the 5 to 6 figures accounts. They don't see a fucking reason to leave. They're like, dude, why should I leave? I have enough money to just keep on winning non-fucking stop. This is a great fucking investment. We win non-stop. That's why I said a lot of our loyal base is people with 5 to 6 figures, right? Small accounts, it's going to be harder to survive, right? But in the end of the day, it's also education too. But you just need to understand that. You need to understand that it's not free to stay here. The way I look at it is free to join, even though we charge, it's fucking free to join, dude. You could just join the fucking group and make your money back. That's why a promo code or anything like that is not needed. You just join the group, make your money like that. It's like, dude, people come in here, they make $500, $1,000 in the first day, like it's fucking nothing. It's fucking free to get in here. It's literally free to join. It's the best fucking investment. But to stay, it's not free to stay here, and it's not free to stay within the market. To stay with us, you got to pay a monthly fee. To stay within the market, you got to be consistent. So that's why I'm saying, options give you options, and they give you the option to make good money, to make the most amount of money trading without taking on big risks. That's why I'm saying, it's possible to make big returns on your account. It's possible to have days 30% on your account, 70% of your account without taking on big risk. If you're having days where there's several wins and they're all massive wins, then yeah, you can do very well on those days not taking big risks. But if you're in a situation where you're in here and you're taking big risk for whatever reason, trying to get rich quick or whatever the fuck, it's that's one of the most disrespectful things you can do trading alongside us with 0-day options. Because I told you, we've created a system where you don't have to take big risk. So if you come in here taking big risk, That's one of the most disrespectful things you could do with us. And basically what's going to happen is, because I've seen it happen before, and it's happened to all of us at some point, if we decide to do this, right? You have to be disciplined to not do this. If you take on too big of a risk, you're going to blow up your account. And just because you blow up your account doesn't mean you have extra accounts. Like I said, some people start with 5K, they flip to 50, they cash out, and then they reset with 50. So if they blow up a couple times, it doesn't fucking matter. It depends on your situation. But the point is, you will blow up your account if you take on massive risk with zero-date options. It's not necessary, and it's not the way to become successful with zero-date options. So if you're fucking full fucking porting or putting in fucking, 40, 50% of your portfolio, sizing in big, I mean, the easiest way to blow up is to size in big. Let's put it that way, right? But if you're up on a trade, don't size in too big, but set the profit stop, add to the winners in that situation, right? So look at this, man. DF, $1,300. It's consistently, man. So you get the point, man. I just wanted to really bring that strong point across, because to join our group, it's basically free. It's the best investment you can make. But to stay here, you have to be good to survive within the overall markets. But we give people the best chance possible to survive. We give them the best trades at the end of the day with a strategic system. And to stay in the market, you can't take big risks, man. If you take big risks, you're in a situation where you're going to lose it all. Even if the risk pays off, you're very likely to lose it all anyways. Like, if you got put in a situation where you took a big risk and it paid off, in a lot of those situations, it's very likely that people just go back right to where they started with just more experience from the lessons that they learned and from what they've experienced, man. That's why I'm saying this whole idea of getting rich quick, it's like, dude, we've optimized for getting rich quick. It's just the safest way possible. We're doing it the safest way possible. So guys, don't abuse the system. Don't come in here full porting. I don't want to see it happen to you. I want you to be in here as long as you possibly can be in here, as long as you want to be in here. And I want you to win, and I want you to print non-fucking stop. I mean, that's what we want for you. We want the best for the overall group and our secured private organization. So I hope that sinks in, man, because I don't want to see anybody, being in a situation where they're set up for success, and then one day they take a stupid fucking risk and they get back all their fucking gains. It's like, dude, you got to work for something, man. Like, think about it. It could be like a job in a sense. You work a certain amount of hours and you get fucking paid. You don't have 1 hour in a job where you risk all of the hours you worked for and then you lose everything you fucking worked for. We're not doing that, man. Right? We're not fucking risking everything we're fucking putting in. So I want to bring that point across because it's very important, man. Because I'm telling you, with zero-day options, it gives you unlimited options. It gives you the options to make, thousands of % returns on your account within months to a year. And then it gives you the options to lose everything you made within one single day by taking big position sizes. Like, worst thing you could do, take massive size. If you're going to take bigger size, add to the wins, set the profit stops, man. I'm telling you, we've created a system that allows you to make the biggest gains possible in the lowest risk way. Multiple trades a day, cheap low-risk trades, biggest percentage gains, highest win rate, adding to winners, setting profit stops, increasing the position size, green to red is a choice. It's like, dude, power hour trading sessions, sometimes 33% win rate, 1,000% win, 200% loss, back-to-back 100% losses, 1,000% wins. It's like, if you do the math and listen to everything I'm fucking saying, it's going to get to a point you're going to realize, like, this is financial freedom, man. Like, if anyone feels like they're under like a financial type of like slavery, this is one of the ways out, is figuring out a skill set to flip small amounts of money into 5 figures. There's people in here every single month, they'll take a couple thousand and they'll flip it to like double to triple of their monthly expenses. If your monthly expenses are $6,000 a month, there's people in here, they'll take a couple thousand, they'll flip it to 10,000 every single month and reset. Some people, they want to flip 5 to 25,000 into 150 to 250, and then they want to trade with that, and then they want to cash out daily. There's different systems you can create with zero dates. I already explained to you. One guy starts with 5, aims for 50, cashes out, resets to 5. If he blows up the account, he has many backup accounts, right? There's different ways to do it. Some people, they aim for that large account, and what they do is they just take out the daily gains. If you have $100,000 and you're making like 3 to 6% on that daily, cash out 3 to 6K daily. Now, another good rule of thumb is, if you want to write this down, this is a good rule of thumb to follow in terms of zero-day options trading. What I would say is this. If you're wondering how much you should risk on the day, most you should risk is like your previous day's profit. Now, obviously, if you had some sort of crazy green day, you don't want to risk all of that, right? If it's like an unusual day where the gains were just so massive because there were so many wins and the wins were massive and you didn't get profit stopped out, so you're up multiple 100%, obviously in that situation, don't risk all that. But like, the point is, if you have a goal in a sense as well, with this, that's another thing. You need to understand with 0 day options, the way we trade, the goal is full of shit, man. You could have like a base goal of like, you know what, I want to make like 3 to 6% daily on my account or whatever, right? You can have a base goal, but you just need to understand the way we trade, that goal is like full of shit. There's some days where without taking on, like I said, we're not taking on extra risk. We just trade a system. There's some days you can make like 70 to 80%. And normally you'll be making maybe like 3 to 10% or something. But on our big days, you could make the craziest fucking insane gains just by trading and not taking on the extra risk. Like I said, if you get back 25 to 50% of gains, then just stop trading, no more extra risk, right? But you get the point. But I mean, a good rule of thumb could be have like a base. If you know your base is around like 3 to 6%, like your average, how, in terms of your average returns, like what's your overall base? So like you can kind of like ignore the massive green days in a sense, or you can get an average, but a good idea is like a base. If on average you have like a base where you're making like in between 3 to 6%, then just risk that. Meaning if you lose like 3 to 6% of your account, if you lose what you normally make on the day, then just stop trading. And then that's what you would call a red day. Never bury yourself into the day. So a good rule of thumb with this is, like I said, if you're normally making, let's say like 3 to 6% on a good overall gold day, then if you're having a red day and you're down 3 to 6% on your account, then just call it. Don't end up risking multiple days of profits on one single day. One of the worst things you could do, you're burying yourself into a situation and it's going to be very emotional and it's typically going to end badly. And there's no need to do that. If you have a red day, just accept it and think of your red days as you lost the previous day's profits, or you just lost what you normally make, if that's 3 to 6%. So if you're compounding your account and let's say every day on average you're making 3%, and then you hit a speed bump and you're down 3%, you're no longer compounded at 3%, you're down 3%, then just call it and walk away for the day, man. So I just wanted to share those tips with you because that's what I found to be extremely useful trading alongside us in our system. If you want to join us, it's the first link down below within the description. I'm telling you, look at how we just started off the week, man. Who do you know started off this week this big, this green, this successful? And we give you the game plans to be self-sufficient. It's just we don't expect people to go 8 for 10 and trade as good as we do, but we do expect them to be green and somewhat self-sufficient before they even join the group with what it is that I'm giving you with the game plans and the way that I'm teaching you how to trade and the way I teach you how we overall trade, right? So look, man, if you want to join, it's the first link down below within the description. You're going to see it's just unlimited fucking winning, unlimited fucking printing, and we have the best 0 day options trade alert system in the fucking market. And you're going to see, man, once you join this group, how massive and how successful Roar is. Look at the fucking gains, man. I'm telling you, we have members in here who just print non-fucking stop, who just win non-fucking stop, unlimited fucking winning, unlimited fucking printing. It's the first thing down below in the description if you're serious about making money and trading alongside with us. We're looking for people who are ready to not only make money and print at the speed of light, but who are ready to fucking grow and be self-sufficient. If that's you and you're serious about getting involved with our secured private organization and you're serious about optimizing for, mastering this overall style of trading, this very systematic approach, like I said, no stop losses, max risk per trade, most we lose what put into the contracts, add to winners to increase the wins, set profit stops, move the profit stops higher to ensure that we make the bulk, that we don't get back the bulk of our gains, is the first thing down below in the description. Because I'm telling you, man, the best thing that I've ever done for my trading is optimize not only for this asset class, for this system. I started off trading ETFs, then I went to penny stocks, then I went to in the money options, then I went to far out of the money options, and then G-Roar came along and he really put us on to the overall systematic approach of, you should trade SPX from 3:30 to 4 p.m., not SPY, and you should not set stop losses, and you should put in, like I said, in terms of with risk management, what I typically say and what I found that works is, so G-Roar said, the most you can lose on the option contract is what you put in. So a thing that I added with risk management, so then just put in the most you're going to risk, like 2 to 3% of your account, whatever that is on the overall trade, right? Obviously, for a large account, you can risk more on the dollar side rather than percentage. If you have a small account, you should be risking in percentages. If you have a large account, you should be risking more in dollars. Think about it like that way, right? Percentages are going to be the biggest growth, but if you have a large account, you don't want to be aiming for the biggest growth. If you hit a loose streak or something, you're going to give a fuck ton of gains back, right? So if you have small accounts, you could think more of a percentages. If you have large accounts, you could think more in dollars. And the reason why you want to think more in dollars with a large account is because you're typically using the money, to fund your lifestyle or whatever it is that you want to do with your overall profits. With a small account, you're typically using it to compound your account and grow it. And the way you do that is percentages, right? But compounding your account requires more exposure to risk, right? So these are all just things to think of, and you don't have to do that. You could try to grow a small account the way you grow a large account and just take small dollar gains. Do it that way. There's plenty of ways to trade, dude. You could do anything. With farther money zero-day options, you could do anything you fucking want to do. It's unlimited fucking options. You create unlimited fucking systems, man. You can create any fucking system you want with our style of trading. Like I said, man, G-Roar created that systematic approach with, like I said, just no stop losses, setting the profit stops, adding to winners, buying the second strike when we're down 70%, holding the trades. That's what we found works best. I mean, you'll see it all the time. It's like, dude, there's really no reason to sell the trades because they literally just come back to fucking life. That's why we really sway against selling for fucking losses, but we'll never set a stop loss. Every once in a while, we might sell for a loss, but we rarely do it. But like inside of Team Roar, the point is to never sell for a loss, to literally just hold the trade. That's why we tell you, whatever you're putting into these trades, you should be comfortable with losing, and it should be your max risk per trade. Whatever you put in is the most you can lose, and what you put in should be your max risk per trade, and what you're comfortable of losing on that overall trade. And keep in mind, we're making 3 to 10 trades. On some days we'll make a couple trades. Some days on our big days we'll make 8 to 15 trades. All things to keep in mind with what it is that I'm saying, right? So that's what we did overall on our day. If you want to trade alongside us, I'm telling you, it's going to be an amazing fucking week to be trading. And it's the first link down below within the description if you want to join us and trade alongside us.